All right, welcome back for another episode of Carnivore Trades. Today is Thursday, October 20th, 2022. Not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. So anyways, here, another choppy day. What else is new here? Really been this way all week long, and this is kind of par for the course, really. It is monthly Opex. I think we talked about this Monday. We talked about it probably last Friday as well. There's a lot of premium to burn, and this is indicative of that right now. Take a look here at the spiders. If you just like slap on, just look at the intraday here. They've really kept it kind of in this range really all week long, right? So not necessarily by the close, right? So we were outside several days here, but this whole box, this is where you closed Monday. Then we came down, tested it Tuesday, came down, tested it again. Wednesday, same thing. Then they closed us right on it yesterday. And then today we popped up, we got back in. So it's really just, this is indicative of theta burn. It's a chop zone, par for the course here. It's typical Opex week type stuff going on this week. And we'll probably see a lot more of that tomorrow. I believe yesterday I even said, it was either yesterday or the day before, that they'd probably close us right around 3,700. So that wouldn't surprise me for us to go right back up here, maybe to the top area of this. We're looking at the SPX now, to the top area of this box. It's just theta burn stuff. So I could see that happening tomorrow. We do have Snapchat earnings. Let's take a look at that. Well, it's getting a little bit of a bid here. So that might be a little bit of a positive here for the market. And for some reason, the market looks at Snapchat like it's a $500 billion company, and I get that it sets the tone for Facebook and Google, but I mean, it's like an $18 billion company. But Snapchat getting a little bit of a bid. We'll check back in on that in a few minutes. Let's take a look at the ES here. Just want to go back to my main setup here. So again, we're following these rising wedge patterns here, and this is kind of this is a tough thing here. So again, we talked about this really all week long, but here's your rising wedge, up, down, break. And then we hit this little support zone, support line, really. Then we had this pump, and then a huge dump. So that was actually the CPI. Oh, no, I'm sorry. That wasn't CPI. That was before CPI. This was CPI down here. But either way, we had a huge dump here in the ES after that little pump. And then, yeah, this was CPI. Sorry about that. But either way, a little pump there on the hourly, and then a huge dump down, and that led into the CPI dump. Well, what do we have here? Rising wedge break, up, down, test support, kind of broke through it a little bit, got back above, and, what do we have here? A little bit of a pump here on the hourly. So now it's kind of, if you just zoom out again, almost kind of looks a lot like that previous pattern there. That 200 moving average right here is kind of saving it right now. And the only thing that really keeps me kind of neutral on this market, and I've been neutral pretty much all week. I haven't really done much. I haven't done any swing trades on the stock market anyway this week. I've done some day trading, but not swing trading, just because this Opex here, and that's really it. The only thing that gives me kind of a neutral bias right now is options X, and it's clear that this is lots of theta chop going on right now. So I would, pattern wise, in any other environment, I would say this is really bearish, but right now it's hard to really jump on that bias right now, just because we have Opex, and I just showed you that it's almost laughably predictable at this point. They're just keeping us right in this kind of zone here, and we got a little bit of a bid before the close, but they it was obviously pushed down, and there's been lots of whipsaw and chop all week long. Once this is over with, we'll have a little bit better of a picture here. I do have some possible cycle dates coming up, one actually next week, but we really got to get through Opex and see how we trade out of that, specifically Monday, Tuesday next week, to see, what kind of action we're going to have. Again, I still think we have another flush in the market, and I think that will come very soon. It's just at this time, it's so hard to be anything other than neutral here in this market, with the environment that we're in right now. Anyways, let's take a look back on Snapchat here again. So yeah, this is fading a little bit, back down. Basically, this is out now negative after hours. So we'll take a look at that later before we wrap up here. But overall, we had a few other companies. American Airlines reported. That did get rejected to that 100 moving average. It was up earlier, but a nice little sell-off there for AAL. That should have support around 13. at least in the meantime, but that did bring the transports in a little bit. So transports are a little bit on the weaker side as well. CSX not helping again. That is now back below the 20 moving average. So a little bit of a, we talked about this kind of like that evening star pattern the other day. That did play out here on some of these names. So CSX lower, back below the 20. That's also putting a drag on the transports. UNP also got hit. New 52-week lows, new 52-week closing lows on UNP with volume. So weakness here in the transports. This is pretty oversold, but definitely needs to be respected there. Freeport Mac also reported that was actually green on the day. So nice little bid there for Freeport Mac. Still kind of in a range here, but nice little green candle there in a down market. Triple Qs, they actually showed a little bit more relative strength here. Spiders, yeah, closed down 83 basis points. Triple Qs only down 0.5%, and that's with Tesla down over 6.5% on the day. Obviously, Tesla earnings yesterday, new 52-week lows for that, and almost a new 52-week closing low there. This has really got to get above that trend line by tomorrow, and I don't think it can. It could, you can't really rule it out, but this really needs to close back above this trend line to negate this head and shoulders. But for right now, that is in play, and we get a secondary close below that trend line. I think Tesla's in a lot of trouble here, but Tesla under a lot of pressure. The Qs were bid up a little bit though. Semiconductors were green today, up 80 basis points. They had a nice pop here in the morning, and they did fade the gains back, but they still managed to close green. ASML, big component of that, up just over 3% here on the day. So ASML kind of leading the charge and helping out the whole sector. I believe Intel had a nice day. Yeah, Intel up 30 basis points. It was higher earlier. You do have kind of a micro bull flag here, but again, this is a good look at the chart here. Look at the trend lines here, or the moving averages here. A lot of spacing here between those, parallel spacing. That's a strong trend, strong downtrend there on Intel. Nvidia, same thing. Got a nice little bid here today. AMD as well, but again, very strong downtrend on here. And then you look at the actual SMH. It did manage to scratch out a gain. And again, you can see kind of this is technically a bullish inside bar, technically, but it's got a high chance of failing. I'll just say that, because you have this is a strong downtrend, and these patterns tend to fail in those downtrends. Now the positive is you do have a good support zone here, and you did get a bounce off of that. So we got a reaction there. It will probably take a little bit more to break through that, but ultimately I think you're going back to this pre-pandemic high before it's all said and done. Outside of that though, semiconductors did lead positively today, and that is a small positive here for the market. And again, semiconductors are a leader. They are a leading indicator, so I like to see them green. Again, it's a little bit of a grain of salt though, considering it was Opex week. IGV as well, up 75 basis points. So another decent day here for IGV. I think Datadog reported. Yeah, Datadog up 4.23%. So maybe that had a little bit of a hand in that uptick for cloud software. So cloud hanging in there. And as far as tech, before I forget here, on the triple Qs, just want to mention this fast. We did reject that trend line again. So that's really, if you could almost make a case yesterday, but really that's at least 2 times in the last 3 days that we've tested that trend line and rejected it. So definitely noteworthy there on the triple Qs, and we have to keep an eye on that moving forward. But tech still managed to be up a little, down a little bit less than the spiders, even with Tesla lower. So the sectors, the semis, IGV kind of helping out with that. Biotech, yeah, biotech was down 0.5% here, so not really terrible, but that is starting to put in a little bit of a bear flag there. I haven't looked at biotech that much recently, but let's take a look here. You can definitely see, I'm going to get rid of this trend line. We don't really need that anymore. There we go. So you can definitely see possible little channel here on XPI. We'll watch that moving forward. That's a bearish channel. If you break that, I don't think so. 72 would be kind of your support short term, but I think this would want to go back to about $70. So be careful with biotech here, especially if you get a weekly close below that line. So, but anyways, tech still managing to kind of scratch out a little bit less of a loss, even with Tesla down. That's the bottom line. Anyways, let's get over the transports. We talked about that a little bit. This is a red flag here. So I've been mentioning this all week. You do have kind of an evening star yesterday. We got follow through today, and you basically stopped right here, at this trend line essentially. So That's where you broke out of. You're basically kind of almost back testing that right now. You still have a little bit of, you still have that green bar there. That was a CPI green bar. But watch the transports here. They're a leading indicator, and they've been leading the market the last month or so. Spiders were down today, 83, 84 basis points. Not nearly as bad as the transports today, but the transports really start to puke. This is going to be, definitely major red flag here. And you could even make a case. Let me just clean this up so you can see it. We just talked about this with biotech, but, I'm just looking at this right now. What kind of pattern is that, guys? So, again, transport's showing some weakness here. And speaking of these bearish patterns here, I didn't even talk about this yet, but I talked about it last weekend, but it's really starting to become apparent now. That's a weekly inside bar there on the spiders. So, again, we're starting to see the setup here for more downside. It just hasn't quite happened yet. Now, again, we have Opex this week, so it's a little bit of a, we try to be neutral during Opex week, but you can see the seeds are being planted here, and they're starting to build kind of a bear base here. So be careful with this market. By the way, we talked about transport. Let's get over to interest rates. The 2-year is a disgrace at this point. I mean, down another 14 basis points here. And again, not to beat a dead horse, but okay, so we talked about this bear flag. I talked about that multiple times a few weeks ago when we were making it, and we broke down, of course. Well, if the 2-year is leading the NASDAQ, which it is, and we look at it by default, the S&P, if we look at the transports, we look at biotech, we see these bear flags on that. Okay, so are we in this kind of period here? So where we are right now on biotech, we'll just use that as a proxy. Are we right here on the 2-year? Definitely got to ask that question here. But again, 2-year getting just absolutely roasted here, down 14 basis points. Market has not bottomed. TNX here, 10-year, another high, up 2.4%. So 10-year just ripping to the upside. 30-year up 2.18% as well. Let's take a look at the 5s. Yep, 5 up 2.25. So these inversions are getting out of hand. They were out of hand before, but it's getting pretty ridiculous at this point. Again, this market is, to me, it's setting up for a pretty good washout. Probably sometime around the election, we'll put in a bottom, I would think, but because obviously the move hasn't started yet. But overall, just nothing really good here. I want to touch on the VIX though. I got a lot of questions about this. The VIX is red today, down 2.5%, with the market down just under 1% here. This is like basically the bat signal for Opex games. It's very typical of the VIX to be down with a red market during Opex week. And the reason for that is these market makers, they might want to push the market lower, right? Just for whatever reason, that's where they want the strikes to go. But they don't want the market, they don't want the bottom to fall out. So what do? You short volatility and you short the spiders. And that creates this situation where it's a kind of controlled sell-off. And that way you don't have panic. If we were shorting if they're shorting the SPY outright and not keeping the VIX suppressed, then the VIX could break out, and then you'd have panic, and then they lose control of the market. They don't want to lose control. They want to keep it controlled. So you see in the VIX red and actually breaking this trend line here with a down market. I wouldn't worry about the VIX being red today. I wouldn't make much out of it, honestly. I think right down here, they'll probably support it. 29 handle, somewhere in that area. Don't really worry about that trend line break. This is typical of Opex action. Just wanted to make that said here before we get into the next thing. Anyways, let's get over here. So we talked about our usual stuff. Let's get to the Homebuilders. Again, breaking the support. Not a good look here for the Homebuilders. This is, let's take a look here at the weekly. Again, we talked about this. This is bearish chop, and it's starting to break down. So they need to save this by tomorrow, but that 54 level is critical support. This low pivot here, to me, that's not much. This will be like a speed bump because you've come down here and you've chopped for a few weeks. That's telling you it's building compression above support. So this is in trouble right here. They need to save this by tomorrow. ITB, again, same exact thing there. For the most part, it is breaking through that 52 handle. Not a good look here. BNQ also in a weak technical position again. I say this every single day. It's oversold. I get it. So that's your kind of bull case. But still, this is one of the softest technical positions you're ever going to see. So be careful with Homebuilders and real estate here. And it's like we're getting to the point where we're hitting a boiling point in rates, and things might be starting to break now. So just be aware of that moving forward. XLF taking a hit as well, so down 1.61% again. Stalled out at that daily 20 moving average. Really don't want to see it lose that 31 handle. Otherwise, it's back down to really that 30, 33 area. Then, of course, you have the lows here. But for right now, XLF under a little bit of pressure. XBD holding up a little bit better. I don't even know if it gets up to this trend line here. You could make a case that you're starting to see, you know, maybe a little bit of a daily wedge right there. So we can keep an eye on that for tomorrow and the next day. So XBD and this little bit of a wedge, you don't want to see that break. That'll take you right back down to 400, which is where I've been saying it's going to go for months now. And we're halfway there. So XBD, again, under pressure. Keep an eye on that little wedge pattern there on the daily. Let's get over to crude and energy. So crude starting to tick positive. It was red most of the day, but starting to tick positive now. Tried to get back above the yellow trend line. Again, that goes back to, that's a monthly. So again, that goes back to 2 years ago in November, and coincidentally, that was the election. I am of the opinion that we bottomed right before the election, or maybe right after. But either way, crude struggling with this trend line. I would love for one more dump here, but we'll see if we get it or not. It's all about pattern at this point with crude, but it's hanging in there okay, and it's up 38 basis points right now. So we'll give it the upside bias for now. XLE, you know, didn't really expect too much follow through today. You're already still kind of overbought, even though we had this little consolidation, and you went right into this little pivot. I've still given it the upside bias to that 88.60, 88.70 area. Doesn't mean it's going to go there in a straight line, but this is still holding up really well. Energy is doing good. XOP did come back in and finish negative, but this pattern is still fine. I still love that pattern on XOP. And OIH confirming above the gap fill and above that pivot. So I like the move there in OIH, and you got a good W bottom here. Doesn't mean it won't do some backing and filling, but this is still holding up well. Again, to beat a dead horse, the only thing keeping me out of this is if we see a panic in the market, it's going to take everything down. Even the strong names will come down. So that's what's keeping me out of energy right now. Nat gas did finish lower here, but it got a nice reaction off that level. I think that it's into a buy zone here. It had a nice reaction. It's dipping a little bit here after hours in the Globex. I wouldn't make too much out of it, but it did get a nice reaction off that double bottom area, and that really satisfied that head and shoulder target. So now I think nat gas is pretty much poised for a turnaround here, and also left a pretty good gap there on the daily, and nat gas has filled those gaps pretty quickly. So we had one back here that got filled within 2 days. We had one up here that got filled pretty quickly afterward. I believe there was another one somewhere around here that got filled pretty fast. But either way, I do like nat gas in this zone, so take that for what it's worth. Dollar index continuing higher. Actually, oh no, it did come in by the end of the day, so down 10 basis points. But again, still holding trend. Nothing really new going on here. I will say for the yen, though, that has satisfied my upside target. So I talked about this literally months ago. I said it was going to go to 150. That's where it's at now. And, you know, you can see that pivot high there. And we're piercing through that right now. But you had a measured move off the lows, you know, basically 75 to, you know, 125. And then you just add 50 to the low here. There's your measured move, a perfect 150. So I think I'd be on watch for the yen to reverse here. But, you know, you got to respect it. It's in an uptrend, and it can still go higher. You know, even though you're overbought in a parabolic, you know, you still got to respect it. But look at this. What's this, like 13 days in a row? So this is just ripping higher here. Definitely needs to be respected. But I do think it is getting long in the tooth here. Anyways, gold getting close to double bottom. I think once this double bottom goes, we get that panic here in gold, and that's what I'm hoping for. And I would love to see that, because I think we're getting close to a very good buying opportunity in the precious metals. Silver holding up a little bit better here. You still have higher lows. Doesn't mean it can't break. Doesn't mean it can't go lower than this, you know, 1780, 1790 area. But it's showing relative strength relative to the other precious metals. So I still like silver a little bit better than gold here. Platinum getting a nice bid. So it's hammering on this wedge trend line again. We'll see if they break it out tomorrow. I'd have to think we probably don't, just because it's Opex, but this is holding up really well. I do like platinum here. Palladium, nice little pop today, up 3%, still inside of this red bar though. So again, kind of a neutral bias there. And then copper, trying again. It's just hammering on that upside trend line. We'll have to watch it tomorrow. Again, back testing that 340 area. So we'll have to see the weekly close tomorrow. If they can break it out, that would be a good look for spot copper. All right, and then lastly, again, going to Bitcoin. Oops, there we go. Yep, so going to Bitcoin. Again, nothing really too new to add. A break of this tail is probably really bad news here, but again, it's holding in here. It's hanging in sideways. And, you know, again, it's just baking in the oven on this weekly time frame. So, again, still just a really big weekly bear base there. And if this goes down, it's probably going to, I would assume that this 13,000 area coincides with the pre-pandemic highs on the market. So that's really kind of what I'm looking for here with the crypto space and with Bitcoin and with the rest of the equity market. It's just a matter of getting through this choppy Opex week here and, you know, just waiting for pattern. Anyways, we got the market here. Market's basically slightly lower after hours. Yeah, oh wow. Snapchat down to $8. Let's take one look here. This is getting pounded. Yeah, so that's a solid 20%, 30% decline there on Snap. That takes it all the way down. Yeah, down to this area here. That's new 52-week lows for Snap. So market not liking that too much, although it's not down horribly here after hours. You are kind of hanging in there. So again, we'll see what we get tomorrow. I'm going to wrap it up here, guys. You guys take care. Come find me on carnivoretrades.com. I'll talk to you guys all tomorrow.